Happy Wednesday out there, folks. It's your skipper here, Darius Dale, to present our macro minute for Wednesday, June 8th, 2022. Starting with asset markets, we have stocks mixed this morning with Asia leading and U.S. and Europe lagging. Commodities up, crypto down, dollar up, global bond yields up. Market moving headlines. Is this a leading indicator or a lagging indicator? So the OECD came out and said the world economy will pay a hefty price for the war in Ukraine, slashing its outlook for global growth this year to 3%. From the 4.5% it saw in December. That's a pretty big reduction, obviously, 33% there. The inflation outlook was doubled to almost 9% for its 38 member states. Traditionally, when you get these sort of intergovernmental bodies coming out cutting growth estimates, it's usually towards the end of the growth cycle slowdown. But this is a particularly unique situation in which we have not really seen a significant reduction in GDP estimates broadly from the sales side, the Wall Street, and we certainly haven't seen any reduction in corporate profit estimates over the medium term in terms of the next 12-month earnings for S&P, et cetera, et cetera. So in our opinion, this is probably just a coincident indicator of them catching up to where the economy has been. And ultimately, we do believe they'll continue to slash their forecast as we go throughout the year as data continues to deteriorate. Shifting gears, China wants your capital. So a big jump in Chinese tech stocks after the government approved licenses for 60 new games in what is seen as a step towards policy normalization. So you had Bilibili, Alibaba, Tencent, NetEase all surged. These are all companies that have been sort of left for dead by Wall Street. And as a function of them being left for dead by Wall Street, we've seen effectively somewhere on the orders of $7 trillion of capital come into the U.S. Markets. We believe that a lot of it's gone into the U.S. equity and credit markets. You couldn't buy Europe, you couldn't buy China, you couldn't buy emerging markets throughout much of the pandemic. And oh, by the way, U.S. overstimulated and grew well in excess of its counterparts, both EM and EM. So if we start to see some amelioration in Chinese regulatory policy, we're going to start to see incremental pressure on NASDAQ type names in support of Chinese tech type names. So to keep your eye on that. We're not making that call, but I think this is maybe the beginning of what could be a multi-year cycle of reallocation, rebalancing from a digital economy perspective. More global liquidity cycle deteriorations. Last call out, the RBI, the Reserve Bank of India, hiked its key rate for the second month and signaled more to come. The repo rate was raised by 50 basis points. Everybody's doing 50s these days, to 4.9%. That's roughly in line with estimates. The bank sees inflation at 6.7% this year through March, up from a previous guidance of 5.7%. Governor, I'm not even going to pretend to pronounce his name, Shakitikana Tanta Das dropped any mention of staying accommodative in his remarks. So again, as we mentioned, it's not just the Fed, it's not just the ECB, it's not just the BCB, the BOC, the BOE, the RBI, the RBA, the RBNZ. All these global central banks are tightening monetary policy at the same time, pro-cyclically into a global downturn. It is unclear where we're likely to land from a growth rate perspective globally, but it's very clear that the direction of travel is lower and the pace is likely to pick up steam to the downside in the coming quarters as a function of the lagged impact of tighter monetary policy. Shifting gears, big movers this morning. Bitcoin down 4% to down 12% month over month. Ethereum down 3% to down 30% month over month. 30-year Treasury yield up 5 basis points to down 5 basis points month over month, as we talked about, tweeted about this morning. If we see inflation data misbehave on Friday, we're going to see a new breakout in bond yields and a new breakout in policy rate expectations when you look at OIS, overnight index swaps, or Eurodollar or Fed funds futures. So keep our eyes on the lookout for there. And what I mean by misbehaving is the sort of momentum in services inflation starts to overtake the disinflation we're observing in goods and starts to push core CPI higher again. That would be a really bad sign for asset markets who have settled into this sort of September pause narrative for now. So shifting gears to our volatility adjusted momentum signal and probable range processes. Some important developments we'll call out this morning. US dollar bullish VAMs, no change there. In the middle of its probable range with 0.9% of downside versus 1.2% of upside. Gold bearish VAMs still north of or near the upper boundary of its probable range with 2.7% of downside, 1.1% of upside there. 10-year nominal Treasury yield bullish VAM still at north towards the upper boundary of its probable range. 7 basis points of upside with 25 basis points of downside. High yield OAS broke to neutral VAMs this morning. As you can see, we're eliminating the bullish the positive skew in the distribution, in the probable range distribution. Not we're eliminating the model, was eliminating that. So you now have 26 basis points of downside versus 47 basis points of upside. So that's important. Another important signal here as well. Alongside that, you have the S&P 500 break the neutral VAM, so it's eliminating the negative skew from the probable range distribution. Still overbought with 4.3% of downside versus something like roughly 8% of downside yesterday. So again, eliminating some of the downside into 615 VIX-3, 615 FOMC, 617 OPEX. If we hang out at these levels, we're not going to see the kind of dealer unwinding in terms of a hedge perspective that we traditionally see in around OPEX. So it means we don't have the kind of Vanna fuel that you're likely to see that you need to see to get a big squeeze higher into and through the FOMC. And oh, by the way, we're doing QT, so the probability of those types of market moves is lower in this regime. VIX still neutral VAMs, no real change there. Minus 8% of downside versus 27% of upside. NASDAQ 100, that is still bearish, fam, still overbought with minus 10.4% of downside. Russell 2000 joined the high yield CDX and S&P 500 and breaking into neutral VAMs this morning. So you're still at the upper bound, or not quite at the upper bound of the probable range. You got 1.5% of upside with minus 8.6% of downside. Bitcoin still bearish, fams, minus 13% of downside, 3% of upside. Ethereum still bearish, fams, minus 14% of downside versus 8% of upside. Ag neutral VAM still in the middle of the range, minus 3.7% of downside versus 3% of upside. Industrial metals bearish VAMs still towards the upper bound of its probable range with 1.3% of upside and 5.5% of downside. So with that, Darius Dale presenting our macro minute for Wednesday, June 8th, 2022. And for those of you who are 42 macro bundle subscribers, we're very excited to have our friend Macro Alf join us for another edition of Macro Bundle Live Q&A. So excited for that. That'll be at 11 a.m. Eastern. Subscribe or upgrade if you want to participate. Cheers.